After months of fevered speculation, the budget has finally taken place, with £40 billion worth of tax increases being announced. But who's going to be paying them? Is it going to be you? How are property investors affected? Keep listening to find out. Welcome to the Property Podcast. This is Rob D without Rob B, for what I think may be the first time ever on this podcast. He is on holiday. This isn't his first holiday in 10 years, I could exclusively reveal, but normally we work around holidays. But this week, we couldn't do that because we knew that we needed to bring you our reaction to the budget as soon as it had happened. So as I'm recording this, Rachel Reeves has just sat down. I've just got off the phone with Rob. And in this episode, I'm going to share with you everything you need to know from a property investor's perspective. So let's get the big one out of the way first. It was all going so well. I was even getting worried about what I would say in this podcast. I thought I was going to have to turn on the mic, say, well, no big news, and just turn it straight off again. But then this happened. An announcement that the stamp duty surcharge for investors was being increased from 3% to 5%. It did annoy us both somewhat. It sounds a bit nitpicky, but it did annoy us that it was deliberately referred to in her speech as a tax on second homes, which paints a certain picture, doesn't it? But of course, it's not second homes, it's all investment properties, assuming you own a home already. Now, this takes place immediately, or rather from the 31st of October. And according to the document that has just been released after the budget, those who've exchanged contracts before the 31st of October are not affected. So if you're in the process of buying now and you've already exchanged, you're all good. If you're not, you'll need to find the extra money. And of course, on a typical £250,000 investor type purchase, and I'd say 200 to 250 is probably around the norm of the deals that we see, that amounts to an extra £5,000. So why do this? Why increase this rate of tax? Well, Rachel Reeves said that it will result in over 130,000 additional transactions from people buying their first home or moving home over the next 5 years. But it's not at all clear to me how that's the case. I don't quite see what the link is between the two. If you ask me, it's counterproductive because, if anything, it'll result in fewer homes being built because developers ultimately only build as many properties as they can sell at current price levels. So if this increase deters investor buyers, and I'll come in a minute to whether it actually will, then that's a group of buyers who are going to be buying less, and therefore less will be built, which you'd expect to have an upward effect on prices and rents. Maybe very marginal, but something nonetheless. So why did they do it when it seems in opposition to their measure of getting all these new homes built? Well, in the past, we've seen situations where property investors are singled out. Of course, 2016 was the major example of this. But this time, I don't get the sense that that's the case. I think it's just that money had to come from somewhere, and they'd already ruled out increasing the taxes that produced the vast amount of government revenue. So once they'd ruled those out, they're kind of scrambling around to get money from somewhere. And there's all kinds of measures that I won't get into in this podcast, where it feels like it's just trying to pull in little bits of money here and there for anyone who doesn't meet this tenuous definition of a working person. But what will it actually mean? In my opinion, and we can talk about this more on the podcast next week, but I don't think it's ultimately going to make much difference to anything. It's annoying. It's undoubtedly annoying. You can feel a bit aggrieved about it. You can say that stamp duty is a bad tax. It doesn't make any sense. And I agree with that. But what I think will actually happen is that investors will adjust, just like they adjusted to the existing 3% charge that's been in place since 2016. At the time, everyone was very upset about that. Now it's just the norm. You just calculate that in your figures. And if you're happy with the numbers, you're happy with the returns you're going to get, the deal still works, then it works. In the same kind of way, it was, I think, 2021 when the further 2% for overseas buyers came into effect. And as far as I can tell, that didn't really deter anyone. We're working with more expat buyers than we ever have before. So I think for buy and hold investors, the vast majority of people who listen to this podcast, it's something to be grumpy about for a bit and then carry on. Obviously, if you've got a transaction that you're underway with, but you haven't exchanged yet, it is extra annoying because you suddenly need to put in more money than you expected, and it will change your initial calculations. But over the entire lifetime of a decade-plus investment, will it make a noticeable difference to the investment case for anything? It doesn't seem like it to me. If you're flipping property, of course, it is a much bigger deal because that's directly adding to your trading costs and it's going to be potentially squeezing the margins you can make. So if my business model as an investor was trading property, I would not be at all happy today. But as a buy and hold investor, yeah, I can feel a bit aggrieved, but it doesn't fundamentally change the investment case. The second big announcement in the budget was capital gains tax, and capital gains tax on property not being increased. Capital gains tax rates were increased on shares and other assets, but not on residential property. Previously, for the last little while, property gains have been taxed at a higher rate than anything else. Now, everything else has been brought up, so it's back into alignment. But on property gains in particular, no increase. So this does, of course, count as good news. I think all the unrest from property investors in the run-up to the budget and all the speculation was a bit overdone, because unless you were planning on selling imminently, it's probably not going to affect you. This government or other governments will tweak the rates in future. So if you're not planning on selling for a long time, who knows what rate you'll end up paying anyway. But of course, if you are in the process of selling or planning to sell, then good news for you, because capital gains tax on property has not gone up. The big revenue raising measure of the budget, of course, was national insurance on employers. So employers' national insurance contributions have increased by 1.2%, which doesn't sound like much, but they've also reduced the threshold at which it starts being paid from, I think it was £9,800 down to £5,000. So that is a big effective tax increase, and that's probably where most of the revenue raising in this budget is going to come from. From a property investor's point of view, not really a big deal. Something else that there was a lot of rumours swirling around about in the lead up to the budget was inheritance tax. And again, from a property investor's perspective, not so much there. The thresholds have been frozen for another couple of years till 2030. So that will increase in higher inheritance tax bills because a smaller amount in real terms will fall within the allowance. But the bigger changes to inheritance tax were away from property. So inherited pensions will now be brought into inheritance tax and will form part of the estate. And certain business assets that are previously exempt will now, above £1 million, be taxed at 20%. So there were some changes to inheritance tax, but nothing that majorly affects property investors. And then finally, from a property angle, you've always got to have it in a budget. There's always a commitment to building more homes. So to tick that box, there was more funding announced for affordable homes, which had been widely trailed and was expected. And they re-announced the hiring of thousands more planning officers, which is supposedly going to help the backlog in the planning system and get more built. There was also recommitment to big transport projects like HS2 coming all the way into London, which would be insane if it didn't, and upgrades to the Trans-Pennine rail route, which are positive, but again, nothing really new. And I think nothing really new pretty much sums it up for me. We'd been softened up to expect drama. I think everyone was expecting a lot of pain, and that pain obviously being offset by big promises on investment, because clearly the country needs to get growing. In the end, and bearing in mind that this is just a snap reaction, it's literally just finished, and so we can talk about this more in a future week, to me, it struck me as neither. There was definitely less pain than had been anticipated, but also nothing really game-changing for the country. And pretty much everything in the end, except this stamp duty increase, had pretty much been leaked in advance because they're trying to settle everyone down. I can't remember there ever being a budget when there's been so much speculation in advance, and that was obviously spooking markets and investors. So we already knew about everything except this stamp duty change, which, as I've said, is annoying, especially if you're in the process right now. But I would guess that in a year's time, we won't be talking about it anymore, in the same way that we're not talking about the 3% anymore. I haven't really thought about it for quite a long time. So that is it for our budget recap. Pretty raw, it's literally just happened, but wanted to put you in the picture, everything we know from a property investor's point of view. Rob B will be back next week. We've actually got a really amazing interview scheduled next week, which I've already recorded, and I'm so excited about you hearing. But as well as that interview, Rob and I will have a chat about our reflections on the budget once we've had a little bit of breathing space to think about it. But until then, thank you for putting up with me for this solo episode. Normal service will be resumed next week. I'll see you then. Bye-bye.